5 a.m. in New York City. Good morning. I'm Bonnie Quinn with your Bloomberg Brief. Here's what you need to know. Waiting game. Stocks struggling a little for momentum as investors await ADP and PMI data releases. Consumer insights. Earnings from Macy's and Dollar Tree on deck as we enter the holiday shopping season again. And talks continue. Russia says peace talks with the US were, quote, very useful. The EU reaches a deal to phase out Russian gas by the end of next year. So let's take a look at these markets. We are seeing futures pointed a little higher. We also eked out some gains yesterday. The S&P 500 was up about 0.25% at the end of the session. Much better for the Nasdaq 100. It was up more than 0.8%. Marvell said it was getting repeat orders, and that seems to have allayed some AI concerns for now. And then Bitcoin staged a little bit of a rebound. We're still trading around the 93,000 or slightly under it mark, and that seems to have added at least some buoyancy to this market. Let's take a look at the bond universe, though, because we can now firmly say that the steepener trade is back in play. Look at that, 30-year yield at 4.74, while the 10-year yield a little bit lower at 4.0788, and the 2-year yield 3.4978. President Trump seems to have almost confirmed that Kevin Hassett is his pick for the next Fed chair. He says he will announce early next year. Didn't move the market that much, but we have an idea of what's going on there at the Fed. So let's have a look now at some individual pre-market movers. Over to London, and she's back. Valerie Teitel, good morning.
Good morning, Bonnie. Let's start with a check on some stocks after earnings. Let's start with American Eagle, up nearly 13% in pre-market trade after they lifted their full-year sales guidance and also posted a beat in net revenue. And Bonnie, this marks a really steep turnaround for the apparel company, who pulled their guidance only just back in May on a apparel write-down. Now, look, American Eagle has surged over 100% since that May pulling of their guidance. So that comes alongside these really big celebrity tie-ups that have made some flashy headlines. Travis Kelce and Sydney Sweeney being two of those celebrities. Moving on to the AI trade, let's talk about Marvell Technologies. They make chips used in AI infrastructure. The stock is up just shy of 10% as the CEO has said some pretty upbeat things when it comes to data center revenue. They see full year guidance for next year. Their data center revenue boosted by as much as 25%. Their custom chip design unit has seen some repeat customers come back with some pretty large orders. Lastly, let's end in the cryptocurrency sphere. Some of these crypto-linked stocks are seeing a lot of volatility. One of them is American Bitcoin. This is the Bitcoin miner backed by Trump's son, Eric Trump. Now, this stock slid around 50% in the session yesterday. Bonnie, it's rebounding alongside crypto rebounding this morning, up 11.5%. Bonnie?
Valerie, thank you so much. Valerie Teitel there in London. And coming up this hour, we're going to speak to Kamakshya Trivedi of Goldman Sachs on the dollar as we look ahead to the private jobs data later this morning. But first, HSBC has appointed Brendan Nelson its next chair. Nelson replaces Mark Tucker, who led Europe's largest lender for much of the last decade. Nelson has been serving as interim group chair since October, and his appointment follows a months-long search. Joining us with the latest now is Bloomberg's managing editor for EMEA Finance, Tom Metcalf. Tom, thank you so much. So, Tom, you know, Tucker had been pretty hands-on at HSBC. Do we think Nelson will have the same amount of clout, given that Tucker had appointed 3 of the last 4 CEOs?
Yeah, exactly. No, every indication is going to be a very different dynamic between HSBC's chair and CEO. So Brendan Nelson, true insider, very well known among UK boardrooms, perhaps a bit less known in Asia and the US. But, you know, so far his style is much more, you know, understated, low-key. And the sense I have is that he'll very much be letting George El-Hedary, the CEO, kind of continue this, you know, strategy of overhauling the bank and very much be sort of a support more in the background. Whereas Mark Tucker, over those 8-9 years of his tenure, was extremely involved, as you said, you know, kind of went through 3-4 CEOs and sort of very much the sense was it was Mark Tucker's bank. I think this is probably a sign that next few years it will be very much George El-Hedary's show.
Yeah, absolutely. Tell us a little bit about this reorganization, because it's now, you know, undergone a massive overhaul, 4 new divisions. Obviously, Asia is extremely important to it. It also has this US-China fragility to handle. So what kind of a job is in front of the bank?
Yeah, it's midway through this in some sense. Massive restructuring already gone through under El Hedry, and every week, every month sort of does bring sort of further tweaks. So I don't think the job is finished yet. And yeah, for Brendan Nelson, it is still a mammoth job. As chair, you've got to be making sure the bank is really navigating that very delicate position it holds. Right? It's London listed, huge operations in the US, huge operations in Asia, and it's just sort of vital that the HSBC managed to navigate what are very complicated geopolitical shoals. And I'd argue this is one of the hardest jobs in banking, which is why, broadly speaking, the analyst reaction, while Brendan Nelson isn't sort of this high-profile, perhaps super dynamic pick, a lot of people are relieved they've gone for someone who really knows HSBC inside out, and at least doesn't have to learn that piece on the fly as chairman.
And that does seem to have factored in, because we know that HSBC struggled with external candidates. It wasn't able to find one, even though it seems to have interviewed plenty of contenders. What does that say about the process, Tom?
Yeah, absolutely. A very public process, and sort of the names that got thrown out there included George Osborne, former Chancellor here, various sort of high-profile financiers. But it does seem, again, from the outside, that they really struggled to, find that external candidate who ticks all that boxes. Obviously, looking for someone with diplomatic experience, but also banking experience, and ideally someone who is super familiar in Asia and the UK. So ultimately, it looks like and it's also quite a hard sell for some people, because this is a very demanding job, lots of travel, and being a UK listed company, it doesn't necessarily come with the pay packet you might see in the US. So all that put together, they kind of did go for the insider option. And the big question for me is, you had Mark Tucker in this role for 8-9 years. Brendan Nelson is 76. It's highly unlikely he'll be in that for as long as Mark Tucker, at least. So it's probably more of a almost interim permanent replacement, and perhaps in a few years' time we'll be talking about a new HSBC chair.
Yes, indeed. Tom, thank you so much. That is Bloomberg's Tom Metcalf there. And another setback for Airbus. The plane maker has cut its 2025 aircraft delivery target to 790 planes. That's down from the previous target of 820. This after it discovered production glitches on its best-selling A320 jet that require additional checks. Joining us with the latest now is Bloomberg's managing editor for space and aviation, Benedict Kamel. So, Benny, we spoke yesterday and it was about one glitch, and now we have another glitch. How much of it was a surprise to find this, and was it because of the software glitch that this was even found?
Well, the software glitch and the panel glitch, if you want to call it that, are unrelated. But what it speaks to is a bigger sort of problem at Airbus. They have issues with their planes, and particularly the A320 airliner. And as a result, as you said, today they revised their delivery target for the year. The original plan was to hand over 820 aircraft, and they've now revised that down to 790. So that's 30 aircraft less. The stock actually going up, which you would think is sort of somewhat counterintuitive on bad news, but they maintained their financial goals for the year. And I think a lot of people had seen this coming. This has not been a good week for Airbus, as you said. We had the software issues over the weekend. Then we had these panels that they discovered that require additional checks. So as this trickled out, I think a lot of people in the market were bracing for the revision that we then saw this morning.
Yeah, we were speaking with Tony Fernandez of Air Asia, who's a big orderer of these airplanes, and he was saying, look, with the competition out there, it's very possible that quality control can drop. Is that a fair statement? Was this a quality control issue, Benny?
Well, it certainly is a quality control issue when you find panels that sort of are out of spec. You could say the system worked because Airbus was able to find this. They've instituted the right countermeasures, and they are taking things slowly to make sure that this is all fixed. So in some ways, they are not taking this lightly, and they are willing to take some pain as a result by revising their targets. But at the same time, the bigger question will be, is Airbus and is the industry moving too quickly? These are two companies, Airbus and Boeing, that are increasing the production rate of their aircraft each year. They're producing more of them, and at some point the industry will find areas of strain. It will probably be on the supplier side. A lot of these companies are sort of small mom and pop shops that don't have the financial and the sort of production wherewithal to meet these higher demands. So that's something that Airbus and Boeing are acutely aware of. At some point, the supply chain will become more brittle and might even snap. And what we saw this week is an indicator of that happening.
And apparently Airbus has been building these gliders, planes without engines, precisely because it can't get its hands on some of these parts. Benny, thank you so much for all of the context. That is Bloomberg's Benedict Kamel. Now to other top stories trending on the terminal this morning. Republicans averted an upset in a special U.S. House election in Tennessee, a relief to President Donald Trump and his congressional allies. Trump-backed candidate Matt Van Epps led by about a 9-point margin with more than 95% of the vote counted. Trump won the district in 2024 by roughly 22 percentage points. President Donald Trump signed into law a measure requiring the U.S. State Department to review guidelines for the country's engagement with Taiwan. This comes after a call in which his Chinese counterpart Xi Jinping reiterated that unification is a critical issue for China. China considers the self-governed democracy of Taiwan part of its territory. Swiss inflation stalled in November with consumer price growth at zero compared with a year ago, driven by lower prices for energy and fuels as well as imported products. The outcome raises the prospect that the Swiss National Bank's prediction of a pickup in inflation in the current quarter to an average of 0.4% will fail to materialize. Coming up, the SEC blocks some funds' plans to introduce high-leveraged ETFs. More on that story next. This is Bloomberg. This is Bloomberg Brief. I'm Bonnie Quinn in New York. And in the United States, the SEC has issued a warning to some firms planning to introduce more high-leveraged ETF funds. For more on this story, Henry Jim of Bloomberg Intelligence joins us now. It's such an interesting development, Henry, because these double and sometimes triple leveraged ETFs have proliferated in recent times. You can buy them on single stocks, from Nvidia to Tesla. There's several on CoreWeave. MicroStrategy has several related to it as well. How do they work and why are they so dangerous?
Well, hi, Bonnie. Thanks for inviting me. They work. These ETFs actually hold options, so they're not using. They're not options ETFs. They actually hold options. That's how they really work, and it's on a daily basis, so they reset every day.
And the SEC is concerned about the amount of risk and says that basically it may not be reflected. You know, it may actually be going over the threshold for the risk that these funds should be allowed to have. Now, what does that say about the amount of risk on these funds' books and also the risk a retailer investor is getting involved in if they buy into these funds?
Well, obviously, it magnifies the risk substantially, even if they are daily, maybe especially if they are daily. And the SEC rule, I think it's 18F4 that they quote, especially it says that anything above shouldn't be above 200% of the value at risk on a daily basis.
And we're just showing some of the firms that got letters. Now, there are already a plethora of these ETFs out there. So what happens? The SEC is objecting to new ones, but will it allow the ones that are in place to just stand?
For the ones that are already there, I'm not sure. But for the ones that are still in filing, I counted on my own database, there's about 450 in filing, and it's not just those three firms. This is across a lot of firms. I don't think that these will really go through, to be honest. But the ones that are already in place, it's going to be hard for them to really shut them down at this point.
Yeah, exactly. I mean, they deteriorate over time from what I understand as well, but that's not the objective of them. Is that right, Henry?
No, the objective is to provide daily leverage for investors and traders. So it's not for long-term investors. So the daily falling in value is not important to these traders, no.
Exactly. Okay, so not really a retail product, although I'm sure some retail traders have been dipping their toe in. Henry, thank you so much. That is Henry Jim of Bloomberg Intelligence. Coming up, Russia describes talks with the U.S. as, quote, very useful, but there's still no deal to end the war in Ukraine. More next. This is Bloomberg. This is Bloomberg Brief. I'm Bonnie Quinn in New York. Time now for your front page news. First up, the Financial Times is reporting Anthropic has hired West Coast IPO law firm Wilson Sonsini to begin work on one of the largest IPOs ever. That IPO could come next year. The FT says the company is not close to picking its underwriters, but has had preliminary and informal talks with big investment banks. Next up, the New York Times is leading with President Trump unleashing a xenophobic tirade against Somali immigrants. The president calling Somalis, quote, garbage he doesn't want in the country. The commentary came at the end of a cabinet meeting during which, the Times reports, the president sometimes appeared to be fighting sleep. And finally, the Wall Street Journal reported the controversy engulfing Defense Secretary Pete Hegseth was a long time coming. The journal says Hegseth has been involved in a decades-long quest to rewrite the rules of engagement, arguing, for example, for American troops to have more freedom to operate without the threat of courts-martial. The journal notes the Defense Department's Law of War manual makes clear the deliberate killing of a shipwrecked crew would be unlawful. And those are your front page news stories today. Michael and Susan Dell donated more than $6 billion even for American children for Trump accounts.
On July 4th, or I think 5th, actually, because the 4th is a holiday, of next year, every parent will be able to claim the account for their child that's 18 and under. And originally, those accounts will be, held in custody by a custody bank, and then eventually, you'll be able to choose your bank or your, brokerage that holds the account for you, and it's the property of the child.
What banks, what asset managers have you been talking to? How do you think, from an infrastructure perspective, this would work, Michael?
Right. I have not been having the conversations with the banks. I actually, a number of them have told me that they're interested in being the banks to hold these accounts. I think it'll be, all the major banks, and, the parents will be able to choose whichever their favorite bank or, stock brokerage is.
What's so interesting is this has bipartisan support, as we understand, from letters being written just yesterday, asking Cory Booker as well as Ted Cruz, asking those to come alongside you, for corporates to invest alongside.
That's right. I spoke with Senator Booker last night about this. I spoke with Senator Cruz about this earlier today. And there is completely bipartisan support for this idea. It's not a political initiative. This is about investing in children, and we think that's the smartest investment that we can make.
Michael, why do you think it wasn't picked up earlier than this? Since 2021, shout out to Brad Gerstner, is almost his idea, this initiative. Why did it take this administration this time?
Well, it's a great question. Brad did tell me about this in 2021. We talked to the prior administration about it. I think it's hard to get legislative action like this done, but now it's the law. And so here we are. And so we have a great opportunity for the future to build on this platform.
Michael Dell there on a $6 billion donation to fund Trump accounts for children. Let's turn to Ukraine now. Talks continuing in Brussels, and let's have a listen to Secretary of State Marco Rubio, who spoke on Fox News after the meeting with the Kremlin.
In 10 years, Ukraine's GDP could be larger than Russia's. These are the kinds of things. Stop the war, make sure they never get invaded or attacked again, protect Ukraine's longstanding and long-term sovereignty and independence so that they don't become a puppet state. They're actually independent and sovereign, and allow their economy not just to recover, but to prosper and turn it into a story of prosperity. That's what we're trying to achieve here.
And foreign ministers meeting at the NATO headquarters to discuss the alliance's support for Ukraine today. Joining us live now from Brussels is Bloomberg's Oliver Crook. So we're getting little snippets. We got word from the Kremlin, Ollie, that there were useful talks. We had those comments from Rubio. Where are we at with these talks?
Yeah, I think that it's very difficult to get an assessment of how well those talks went for those 5 hours that were spent discussing in Moscow between Steve Witkoff, the special envoy, Jared Kushner, the president's son-in-law, who's also been working as a sort of diplomatic liaison on a number of different issues, and of course Vladimir Putin. We've really heard basically that readout from the Kremlin that said these were constructive talks, that they're going to continue to engage, but basically that a lot of work is still left to do in Moscow and to do in Washington. You heard it there also from Marco Rubio, who's really sort sort of talking about a much broader architecture than just a quick ceasefire deal. He wants to see something that is durable, that ensures Ukrainian sovereignty and independence, but then, of course, obviously brings the war to a close. It is very difficult to assess now where we are in that living document, that 19-point plan, how close the two sides are. Of course, Marco Rubio speaking there, he is a conspicuous absence here at the NATO headquarters. He was supposed to be here. Usually the U.S. Secretary of State is at these meetings. These European leaders and foreign ministers are really going to want to have a brief in terms of how close they are, because, again, initially the Trump administration a week and a half ago wanted to go warp speed. It seems now we're going more diplomatic speed.
All right, Ollie, we do have to leave it there, but you are outside NATO headquarters. NATO foreign ministers are meeting today, and we'll get the latest from you on that in a little bit. That's our chief Europe correspondent, Bloomberg's Oliver Crook. Let's take a look at these markets now. After a choppy session in tight ranges for the S&P yesterday, we are seeing futures pointed higher there. Same for the Nasdaq, although it was a better day for the Nasdaq 100. Just a couple of sectors were lower. Utilities, for example, one of them, and it rose more than 0.8%. We're seeing a little weight to the US dollar index, some strength for the yen today, and the 10-year yield at 4.08. We'll speak about all this with Kamakshya Trivedi of Goldman Sachs next. This is Bloomberg. It's 5:30 a.m. in New York City. Good morning. I'm Bonnie Quinn with your Bloomberg Brief. Here's what you need to know. Waiting game. Stocks struggling for momentum as investors await ADP and PMI data releases today. Consumer Insight. Earnings from Macy's and Dollar Tree on deck as we continue the holiday shopping season. And talks continue. Russia says peace talks with the US were, quote, very useful. The EU reaches a deal to phase out Russian gas by the end of next year. So let's take a look at these markets. We do have futures pointed higher, so perhaps it's going to be a better session today. It was very choppy yesterday. It looked like it was going to be a negative session, and then the S&P ended up about 0.25%. Pretty tight ranges for that index. Less tight for the Nasdaq 100. It was up more than 8% at the end of the session. Then we had Marvell saying it was winning repeat orders, and that's quelled some AI fears. And Bitcoin as well, staging a bit of a rebound. Sid Verma of our MLive team saying it is rebound without a real belief now, though. He says that strategy, saying it was raising a dollar reserve, was helpful for liquidity, but sobering for ideology. Let's take a look at the bond sphere, because we definitely are still seeing that steepener happening, with the 2-year yield still below 350 and the 30-year yield hanging out there at 474. Some movement in Japan, of course, today as well. It looks more likely that the BOJ will hike, and that is providing some strength for the Japanese yen. Well, let's get to individual stocks to watch now. Over to London and to Valerie Teitel. Valerie.
Good morning, Ivani. Let's start with a check after earnings. American Eagle raising their full-year sales guidance and also posting a beat in net revenue. We're seeing those shares surge nearly 13% in the pre-market. American Eagle has really been on a tear, Vani. It's up 100% in the last 6 months. These celebrity tie-ups, these splashy ad campaigns have really paid off the likes of Travis Kelce and Sydney Sweeney. So positivity for American Eagle. We're also seeing positivity when it comes to the AI trade. As you mentioned, Marvell Technologies, the CEO, saying some quite optimistic things about their guidance when it comes to data center revenue. Their full year 2026 guidance was boosted by 25% when it comes to data centers. We're seeing Marvell Technology up around 10% in the pre-market. Now, they make chips mostly for infrastructure, and they also announced an acquisition of Celestial AI, paying around $3 billion for it to help their push into AI infrastructure. Lastly, let's end in the cryptocurrency sphere. We are seeing a rebound in Bitcoin for a second day in a row now. We're also seeing a rebound when it comes to American Bitcoin. This is a Bitcoin miner that is backed by the son of the U.S. President, Eric Trump. It's up 8.6% in pre-market trade after sliding 50% in the session yesterday. Bonnie?
Yeah, volatility galore in that one. Valerie, thank you so much. That is Valerie Teitel there. Well, we're a couple of hours away from the ADP data. Goldman Sachs' Kamakshya Trivedi weighing in on the impact of the jobs numbers on the dollar, writing, quote, as the U.S. data backlog is slowly cleared, it will reveal a softer run rate for the economy, particularly the labor market, that will clear the way for more policy easing and a weaker dollar from here to the end of the year. Kamakshya Trivedi is Chief FX and Emerging Market Strategist at Goldman Sachs, and he joins us now. Kamakshya, in recent days, particularly since the market took a turn in pricing, we've seen guests be a little less concerned about the labour market than they had been before this data blackout. You are still concerned about the labour market. Explain why.
Good morning, and thanks for having me. Yes, I think that, what you have seen in the data lull is that some of the second-tier data indicators, also some of the private sector indicators, have still indicated a tentative signal that the layoff rate is beginning to pick up. And I think that's important because what you had going into the shutdown was a labor market where you didn't see a lot of hiring, but there was not that much concern around firing. And I think what I am looking to see in the upcoming reports is whether those tentative indications that layoffs and the layoff rate is beginning to pick up is actually something that is borne out or substantiated in the full set of payrolls and household survey data that we get. I think that's the key thing to watch.
So you say that this is going to lead to dollar weakness, Kamakshya. The administration won't be too pleased about that. Is there something that can be done?
Look, I think that the dollar weakness is a function of the fact that, our view that, the U.S. economy and markets are less exceptional than they have been in the past. And as a result of that, the dollar no longer warrants its very rich valuation. We've already seen that valuation erode to a significant extent, so far this year. We think there is more to go in that. And that's just a reflection of the fact that we think the Fed is going to be easing policy more in December, again next year. That's something I think that is consistent with some of the views that the administration has expressed. And on the other hand, we don't have quite as much easing priced into the rest of the major G10 markets, with the exception of the UK. So it's really the US where we are seeing this combination of somewhat softer data and, more significant, deeper policy easing, which we think will keep the dollar on the back foot.
And of course, I imagine that if Kevin Hassett were to be the next Fed chair, that wouldn't change your thesis in the slightest. It would add weight to it, in fact.
Yeah, I think it's one of the additional reasons why the skew to rates in the U.S. might be, more towards deeper cuts rather than the other side of the distribution. I think that there are a number of forces pushing in that direction, the weakness in the economy, the fact that, you might also see some of the worst tariff impacts on inflation pass into the rearview mirror as you go through, the early part of next year. And a reshaped Fed might add to that impulse in direction of weaker rates and a softer dollar.
I want to ask you about the yen, because we saw a little bit of relief today. Obviously, it's back below 156, but I mean, that's still pretty weak for the Japanese yen. What happens if we get this hike in December?
Yeah, I think that is probably one of the things that is actually pushing the BOJ towards a potential hike in December. Remember, they were looking for two things to feel comfortable about hiking. One was that the U.S. economy, while it was slowing as a result of the sort of, aftermath of Liberation Day, but was not really going into a tailspin of any kind, that's definitely been confirmed in the last couple of quarters. And the other thing they wanted to get confirmation was that you had a self-sustaining wage growth trend. And you're beginning to see some early indication that may be playing out too. So I think those are the things that are pushing the BOJ to consider hiking in December. We've had a call for them to go in January for a long time, but I think they probably are feeling comfortable enough. And I think that's important because, we've seen the yen weakness, as you said. It's weakened considerably further after the new prime minister. And, a weak yen is not popular in Japan either. And so I think you're going to see some pushback, both from the administration, but also from the BOJ against, an excessive amount of yen weakening from current levels.
Kamakshya, I have to ask you about your favorite currency pairs at the moment. Is there any way to play this global sort of upturn in events? So we have, tariffs going on in certain countries and, getting lowered in other countries and so on. How do you play a scenario like that through the FX space?
Right. Look, it's hard. I mean, as you were saying, you're seeing not just that it's going on against certain countries and going off against other countries. It's also within countries there are certain goods being exempted, certain ones not. So I think that those are hard trends to play out from a macro standpoint. But I think I'd say one of our highest conviction views related to this is we think that the CNY, the Chinese renminbi, is a currency that's going to continue to appreciate on a sustained basis. What's happened there is exactly in line with what you're saying. You had these kind of very high levels of tariffs threatened early on. There's now a détente. You have some more reasonable trade outcomes. And the Chinese currency is very undervalued in our metrics. As long as you have this combination of, good trade relations and very significant growth in Chinese exports that you are seeing, I think policy authorities there will be willing to let the CNY appreciate on a gradual but sustained basis. It's making new year-to-date lows every week. We've seen that this week as well. I think that trend has a lot further to run in FX markets.
And beyond FX, just in terms of your EM strategy, part of the portfolio, is China investable these days? I mean, we saw this huge run up for the stock market. Is there more to go, or would you be getting a little bit trepidatious right now?
No, I think there is more to go. I think that, certainly, China also provides, exposure to some of those high-tech industries that have been doing well in global stock markets across the world. So I think there's definitely more to go there in the domestic equity market. As I mentioned, I think the currency is on a more, stronger trajectory as well. We think that's likely to continue as well. And that's an important ballast or support for the broader emerging market universe. It's kind of hard for EM as a whole, particularly EM equities, to do well if China is not doing well. So I think that's important. I think there's also opportunities on the local rates market side in emerging markets, but that is more amongst the higher yielding countries, places where the rate cut cycle will get going, hasn't really got going. Brazil is the most obvious example. I think there's a lot of potential both in Brazilian equities and bond markets going into next year.
Fascinating. And you're not concerned about the geopolitical trends between the US and Brazil?
Again, another place where, it is certainly a concern. I think these risks are going to ebb and flow. I don't think you can ever take your eye off the ball there. But on the margin, things have become a little bit better, if anything. You've seen more exemptions for a lot of Brazilian goods, particularly agricultural goods, as, the focus of the administration has pivoted onto something like affordability. And so I think you're reaching, again, like with China, a more reasonable set of trade outcomes that should allow the domestic policy authorities to focus on domestic cycle and that where you're seeing inflation come down. You have 5%, even less than that, 4 to 5% inflation, 15% rates. I think there's a big room for rate cutting cycle there.
All right, some very, very interesting comments to parse there. Kamakshya, thank you so much for joining us. That is Kamakshya Trivedi of Goldman Sachs. Now to other top stories trending on the terminal this morning. Republicans averted an upset in a special U.S. House election in Tennessee, a relief to President Donald Trump and his congressional allies. Trump-backed candidate Matt Van Effs led by about a 9-point margin with more than 95% of the vote counted. Trump won the district in 2024 by roughly 22 percentage points. HSBC has appointed Brendan Nelson as its next chair, replacing Mark Tucker, who led Europe's largest lender for much of the last decade. Nelson has been serving as interim group chair since October. His appointment follows a months-long search. Binance has named co-founder Yi He as co-CEO, the biggest change to its top leadership since co-founder CZ steps down. The appointment comes after President pardoned CZ, who resigned in November 2023, following a guilty plea to anti-money laundering and sanctions violations. Analysts have said the pardon could make it easier for Binance to consolidate its U.S. operations. Coming up, the SEC is warning on high-leveraged ETFs. That's next. This is Bloomberg. This is Bloomberg Brief. I'm Vonnie Quinn in New York. And in the United States, the SEC has now issued a warning to some firms planning to introduce high-leveraged ETF funds. For more, Henry Jim of Bloomberg Intelligence joins us now. There are plenty of these types of funds out there, Henry. Why is the SEC so concerned all of a sudden?
I think the SEC concerned with the flurry of filings that we've seen in the past couple of months, of 3 times, actually 5 times leverage ETFs, which go beyond what currently exists in the market.
Oh my gosh, we already have double and triple leveraged ETFs on single names, even on commodities as well. How do they work and why is there so much risk involved?
Well, the ETFs work by investing either in, they invest in derivatives, either options, futures, or more likely swaps. They hold swaps, and every time they get money, they increase the position and exposure to the leverage position of the underlying asset.
And the SEC is concerned the risk exposures exceed SEC limits, but that also means the retail investor, if they take part, is exposed to that too, right?
Yes, absolutely, because when you invest in the ETF, you get what the ETF is exposed to. And indeed, the retail investor, although it's not a big participation in these ETFs, maybe, but if they should be, they have a lot of risk that they're undertaking on a daily basis.
Yeah, exactly. Now, the ones that have been applied for, as you say, some of them are, 5 times leverage, et cetera, et cetera. But, of the ones that are already in existence, is the SEC concerned about those at all? And will there be any action taken on the ones that are already up and running?
Well, the ones that are up and running, I think the maximum they have are 3 times leverage. And these have been grandfathered in for quite a while. But the SEC always has the option of revisiting these strategies in the future. What I can say, though, is for the ones that are already filed, these are probably, they will either have to be amended, so they extend the deadline. So they were supposed to go, I think, effective next week, or they will just more likely have to withdraw them.
It'll be a fascinating time to watch the SEC and its action against these ETFs or potential ETFs. Henry Jim of Bloomberg Intelligence, thank you for joining. President Trump has signed a bill that requires the State Department to review guidelines for the United States' engagement with Taiwan. The Chinese Foreign Ministry spokesman responded, saying the U.S. should, quote, handle the Taiwan issue with utmost caution. I should mention that this is something that happens at least every 5 years. It has to be done. Joining us now from Taipei is Bloomberg's Samson Ellis. So, Samson, as I say, this had to be done, but is there some extra significance to this new bill?
Well, on the surface, this looks like little more than a procedural measure from the US government. If you look at the wording of the bill, as you just mentioned, it requires the US government to review how it interacts with the government in Taiwan, plus look for ways to remove self-imposed limitations on that interaction and do that every 5 years. But it certainly is a major display of support for Taiwan, and the fact that it passed the House of Representatives and the Senate unanimously just underscores exactly how deep the support for Taiwan is in the US. And it does recall a move way back in the last few days of the first Trump term in 2021, when the Trump administration made a surprise move by removing many of the self-imposed decades-old limitations on how the US interacts with Taiwan. For example, requiring diplomatic and military officials to get written permission before traveling to Taiwan, or even restrictions on where the US could meet with Taiwanese officials. And obviously, if you step back, the broader context of this is that Taiwan is at the center of something of a spat in this part of the world between China and Japan, where China's continuing to rail against comments made by Japanese Prime Minister Sanae Takaichi last month that were China to attempt to invade Taiwan, that could potentially pose an existential threat to Japan.
Yes.
But while that dispute is more about Taiwan rather than involving Taiwan, this latest move from Washington has certainly been welcomed in Taiwan.
All right, Samson, thank you so much. That is Bloomberg's Samson Ellis in Taipei. Shifting focus to earnings now, shares of the owner of Zara, Inditex, surging as sales accelerated in November, highlighting its resilience in the face of weakening consumer sentiment that's hitting many of its peers. Bloomberg opinion columnist Andrea Felstead joins us with the latest. So obviously we've seen, individual retailers from Inditex to American Eagle to, Abercrombie do extraordinarily well because they're just capturing a moment. Is that what it is, Andrea, or is there more to that story?
Consumers are very choosy. So to do well, you have to be very reasonably priced, or you have to be very good. That's why we've seen Inditex do well, we've seen Ralph Lauren do well, we're seeing Tapestry do well. You've got to have something that is resonating with the consumer, that is really encouraging them to buy.
Now, we get Macy's and Dollar Tree before the bell here in the United States, so two very different consumers potentially, although, you know, you never know these days. What do we anticipate hearing?
Well, I think it'd be very interesting to see what they say about the consumer. Obviously, Macy's, through Bloomingdale's, has exposure to that higher-end shopper, probably benefiting from Sachs's woes. And at the other end, Kohl's also struggling, helping the lower-end consumer. So it will be really interesting to see what they say about that higher-end consumer and also that middle to lower-end consumer, which is coming under pressure.
And then Dollar Tree, of course, you know, we know that consumer, and given the amount of talk about the bifurcated consumption economy, do we expect that Dollar Tree will see strength for good reasons or negative reasons?
Well, it's very interesting because usually when, you know, particularly the middle income consumer comes under pressure, they trade down. So it's going to be really interesting to see if those consumers are trading down to the dollar stores or they're just stopping spending, full stop.
Yeah, exactly. Well, a couple of earnings for us to parse a little bit later on anyway, Andrea. Thank you so much. That is Bloomberg's Andrea Felstead. Coming up, we're going to get you set up for your trading day. More earnings on deck and that jobs data as well. This is Bloomberg. This is Bloomberg Brief. I'm Bonnie Quinn in New York. Now, a look at what's ahead for your Wednesday trading session. We do still have earnings, Macy's and Dollar Tree results coming before the bell. Plus, a little data, ADP Employment data at 8:15 Eastern, and that's followed by PMI data at 9:45. Perhaps a little less of interest, it's a little staler. Salesforce earnings then out after the market close. So let's take a look at some of the earnings movers that we've seen. American Eagle jumping almost 13% higher now following a sales beat and a guidance boost. Now, Marvell Technology also higher. It was lower after earnings came out, even though it beat and raised, and it gave some good comments about AI and repeat customers because it's acquiring Celestial, right? So that had the stock lower, but certainly in the pre-market up about 10% on that beat. Another one that beat and raised was CrowdStrike. It raised its guidance as well for next year, cited resilient demand for its AI-enabled cybersecurity products. That said, investors were probably looking for a bit more of a beat and a raise because, you know, insatiable appetites and all that. Let's take a look at the macro movers because the environment is set up for a positive start for S&P futures, though I must point out we are off our session highs. The S&P was up about 0.25% yesterday. Little weight to the dollar index. The 10-year yield in focus as that steepener trade seems to be back on everyone's radar. It's at 407.88. And then let's take a look at gold and Bitcoin because Bitcoin's rebound definitely injected some enthusiasm into the market. And we're still trading around $93,000. Maybe a little bit of relief there. Gold down about 0.1%, but we're still hanging out around the $4,200 mark. And I just wanted to point to Europe gas futures because, of course, Europe has now accelerated its timetable for getting out of Russian gas imports. It's now going to be completely phased out of that by the end of next year. That's it for Bloomberg Brief. Surveillance continues the conversation. This is Bloomberg.